Ever wondered how people make crazy money while literally sitting at home, just tapping on a screen? Welcome to Step to Wealth, where today we're breaking down the stock exchange in the simplest, no BS way possible, so even a total beginner gets it. Trust me, once you understand this game, you'll never look at money the same again. So first things first, the stock exchange isn't some mysterious place only rich guys in suits understand. It's basically a massive digital marketplace where billions, even trillions of dollars move every single day. Think of it like the biggest online bazaar in the world, but instead of buying clothes or phones, people are buying pieces of companies. Yeah, real businesses, like the ones you see every day, are being traded like items in a game. Now here's where it gets interesting. What people are actually buying are called shares, and a share simply means you own a small piece of a company. Imagine a company like a giant pizza, and every slice of that pizza represents a share that someone can buy or sell. The bigger and more successful the company gets, the bigger that pizza becomes, and guess what? Your slice automatically becomes more valuable too. Let's say a company suddenly starts making more money or drops a killer new product, people get hyped and rush to buy its shares. When more people want to buy than sell, the price shoots up, and that's where the magic happens because you can sell your share at a higher price and pocket the profit. It's like buying something cheap and flipping it for more, just way faster and on a global scale. But don't get it twisted, this isn't easy money. It's more like a high-speed game where prices can change in seconds. 1 minute you're up, feeling like a genius, and the next minute the price drops and you're like, yo, what just happened? That's because prices don't just depend on facts. Sometimes even rumors or hype can push them up or crash them down. And here's the wild part. Companies also use this system to grow bigger and stronger by selling their shares to the public. When people buy those shares, the company gets fresh cash to expand, build new products, or dominate their market. So it's not just investors making money, companies are leveling up too, making this whole system a win-win. At least in the perfect scenario. Now here's where things start getting a little risky, because the stock market isn't just about smart moves. It's also full of uncertainty and straight-up guessing sometimes. Nobody on this planet can predict with 100% accuracy which company will blow up and which one will flop, no matter how confident they sound online. That's why investing can feel like a mix of strategy and luck, kind of like playing a game where the rules keep changing. A company with a strong reputation and solid performance usually attracts more investors, and that demand pushes its share price higher. On the flip side, if a company starts messing up or losing trust, people panic and start selling, causing the price to drop fast. So yeah, perception matters a lot here, sometimes even more than reality itself. Unlike a normal market where you can touch what you buy, everything in the stock exchange is digital, just numbers moving on a screen. You're not holding anything physical, just watching prices go up and down in real time like it's some intense video game. And because of that speed, opportunities can appear and disappear in seconds, so timing becomes everything. Sometimes all it takes is a single rumor, a news headline, or even a viral tweet to shake the market. People react emotionally, they start buying or selling in panic, and that creates massive price swings even if nothing actually changed in the company. It's kind of crazy, but that's how powerful human psychology is in this game. Now here's another twist. Even weak or struggling companies can see their share prices rise if enough people believe in their future. Investors might see potential in an idea, and if enough money flows in, the price climbs despite poor current performance. This is why you'll sometimes see companies with low profits still having high stock prices. It's all about expectations. This kind of hype can actually help new or small companies grow because they can raise money from investors even before becoming profitable. That cash can turn their ideas into real products, helping them survive and maybe even dominate later. But yeah, there's a dark side too, because sometimes all that hype is just empty air waiting to collapse. And this is where things can go totally sideways, because when prices rise only based on hype and not real value, you get what's called a bubble. Everything looks amazing on the surface. People keep pouring money in, and prices just keep climbing, like there's no limit. But sooner or later, reality hits, the bubble bursts and prices crash hard, leaving late investors stuck with losses. Now, to keep track of how big companies are doing, markets use something called indices, which are basically scoreboards for the economy. For example, in Germany there's an index called DAX that tracks major companies and shows whether they're performing well or struggling. When the index goes up, it usually means businesses are doing good, and when it drops, it signals trouble in the market. And it's not just one country. Almost every major economy has its own index that represents its top companies. All these markets are connected globally, meaning what happens in one part of the world can instantly affect another. That's why the stock exchange isn't just local. It's a massive worldwide system where everything is linked. At the end of the day, the stock exchange is simply a place where ownership of companies is bought and sold, but the way it moves is driven by people, emotions, and expectations. It's powerful, unpredictable, and full of opportunities if you understand how it works. So now that you get the basics, you're already ahead of most people who never even try to learn this game. If you found this breakdown helpful, make sure you stick with Step to Wealth because we're just getting started. We're going to keep breaking down money, investing, and wealth in the simplest way possible so you can actually use it in real life. And who knows, the next time you hear about stocks, you might not just watch, you might play the game smart.